Hi, everybody. As we had a lot of market volatility recently with Trump tariffs and a lot of things going on in stocks, bonds, currencies, and crypto, I thought it makes sense to have an update on our post-US election cycle dashboard and see where we currently stand with Bitcoin and what we might expect looking at the past cycles. Now, let's jump right into our cycle dashboard here. I just want to remind you what we are doing here. It's an update from our last video. So this is the post-US election cycle monitor for Bitcoin. So it always starts in November of the election year to the following year. So you have the purple line, that's the 2012 election, the green line 2016, the blue line 2020, and finally the orange line is the current Trump administration cycle. What you also see is that we have our gray line, the projection line, which is basically an average of the prior cycles, but we adjusted also for a scaling factor because, as you can see, due to the law of diminishing returns, Bitcoin is becoming a larger and larger assets. Also, the returns are getting lower. If you look at the ROI multiplier on the y-axis, you see with every cycle we have a lower return expectation. Now, what is very interesting to see here is that after outperforming our projection line right after the Trump election, we underperformed it as the market and Bitcoin was anticipating the trade wars. And so we had a lower performance as projected. But what's really interesting is that from Liberation Day onwards, Bitcoin decoupled from NASDAQ and the MAX 7 and mirrored more the performance of gold and became a reserve asset, so to speak. So that's really the interesting development. And so as you see, we are right crossing our projection line. And I think that's something you should also expect. We can't just mirror the projection line. So it's very likely that we just oscillate around the projection line going forward. Now, when you look at the returns, of course, it's also important to look at the drawdowns, right? Because Bitcoin is a very volatile beast. And so what you can see is the orange line again, that the drawdown is more or less in line of what you should expect. But I also have to remind you that it's normal that during the summer months, you will likely see the next dip. And as you can see in 2020 and 2012, that was really a severe drawdown of up to 70%. Now, as we are in the second Trump term, what I expect is that this cycle maybe mirrors more the cycle of 2016. And although we didn't meet it here by the timing, we definitely have a similar magnitude of drawdown. So in the 25% range, up to 30%. But again, expect also a larger dip, normally over July during the summer months. And so I find it very likely that we have a similar return pattern of more of the 25 to 30% drawdowns rather than the 50, 60, 70% drawdowns. So this cycle really mirrors the first Trump term cycle also if we look at the dollar, if you indexize the dollar at 100 for the first Trump term and now the second term, which is the green line, you see we hit first a rally in the dollar, followed by a sharp downturn. And here the dollar even had a stronger downturn, which is in line with what the administration wants. They want a lower dollar. You can also read the Moran paper where they speak about the lower dollar. And as you know, a lower dollar is an easing in financial conditions, which means a support for risk assets and also a support for crypto. And that's the reason why I think you should maybe more focus on the 2016 cycle, which was also a right translated cycle, which with a very strong performance in Q4. So what does that mean? You see here the drawdown during the summer months. Now, as we underperformed during the beginning of the year, our projection line, it is not unlikely that we might outperform the projection line so that the drawdown is not as bad. So what this point here implies is a drawdown to Bitcoin of 65 to 68K, which at this moment I find very, very unlikely. So if at all, I think a drawdown to the 90K area is more likely, but that remains to be seen. And what we also see is that if we get this right translated more 2016 cycle, then we should expect a high in the range, in the area of around 220K before it settles down at the end of the year of around 150K, which is, I would say, in line with what a lot of research houses are predicting. Also, if you look at technical indicators, chart patterns, I think Bitcoin around 150 is not out of reach. So keep in mind that this is not a real forecast or crystal ball. These cycles and also the gray area should provide you more a perspective about the behavior of Bitcoin and the path going forward, right? It should provide you some perspective of what to expect as we are now reaching the overhead resistance around 104K. So this was intended to be a quick video. So be prepared. There will be more volatility normally during the summer months. At least that's what we saw in the prior cycles. And if the 2016 cycle is playing out, then we can expect some nice upside during the fourth quarter of this year. So I hope you liked it. More information on marketvector.com, and stay tuned for more updates on this channel. Thank you very much.